Thank you for joining us. We are on day 2, a brand new day of a series called Fibonacci to Fund It. And we're happy that you're here because the whole premise of this particular series is to help take an individual who may be participating in day trading. Maybe you're relatively new. Maybe you've been on the journey for a while, but wherever you may be, the goal is to make this about you, to help you break through, to help you be free, to help you potentially go from where you're at to the next level. Let's jump right in. Let me start off with a disclaimer. I am learning how to do the screen record and the voiceover. I'm doing a voiceover as we're speaking right now. You're already watching a trade in progress, and I have to let you know right out the gate, I had already marked some things on the screen on the chart, and I thought it was recording on the screen record, and it was not. So please forgive me. There's already been a trade or two that's already taken place. We're already in profit on day 2 of this prop challenge, a 50K account from Top Step. And you can already see that we're already up about $176. So my apologies. I am doing this learning as I go on the fly with the whole premise of being honest, transparent, and just showing you how to pass a prop challenge. Disclaimer, I am not a financial advisor. I'm showing you my journey and presenting my trade ideas on our channel Free Yourself with the goal to help you be free. Moving forward, what you're looking at right now on the screen, I had already highlighted a couple of things. Number one, towards the bottom, you see it says bullish order block. I'm going to come back to that in a moment. You also see at the top of the screen a traditional fair value gap versus the fair value gap on the bodies. I'm going to explain that in a little bit more detail in a moment. You also see in a blue circle the 50%, which the 50% or midpoint, the halfway, the equilibrium of the Fibonacci is not a true Fibonacci number. It is a significant point that I use as a foundation in much of my trading, but it's not technically a Fibonacci number. So I want to highlight that. The areas that you see that are circled when I took the first trade or two before I realized that the screen record wasn't working, I had already circled the 23.6, the 38.2, 61.8, a golden ratio, and the 78.6. These are levels within the Fibonacci. Let's go back and do a little review for those who watched day 1. And if you missed day 1, I want to encourage you to go back, finish day 1, Fibonacci to Fund It, before you watch day 2. That's very important in the foundation and the building blocks of your understanding, because what we're doing in the first video is we're establishing the 1, 2, 3s and ABCs. And here we want to be a little bit more fluent. So I would encourage you to finish the first video before watching the second video. In any event, there's a video I did on what Fibonacci basically represents and how it's found all throughout nature, in your body, in the universe. It is really remarkable on how once you put on the glasses of the Fibonacci, you'll be able to see all around you. There are areas that this is being demonstrated potentially over and over again. We find it also in the trading space. So the Fibonacci, the biggest lesson I learned over my 10 years of trading that helped me, or one of the biggest lessons I'll say, if you anchor the Fibonacci to the previous trading day's high and the previous trading day's low, the numbers are much more meaningful. And when I say the trading day, I don't mean the calendar day from 12 a.m. to midnight, 12 p.m. I'm referring to from when the market opens at 6 p.m. Eastern to when the market closes at 5 p.m. Eastern the following day. The point is, you want to look at the previous trading day in that regard, and then identify the different areas of the Fibonacci as like you see on the screen. So, having said that, let's go back and talk about this order block, the foundation, or the below, the bottom side, the sell side of the particular screen that you're looking at right now, We're right now on a 15-minute chart, and we're going to be here for a moment. Now, the order block that we're speaking to is a 1 hour order block. As such, because it's on the 1 hour candle, the top of the order block is on the top of the red candle, top of that bear candle prior to the move up. That is by definition the order block. It's the top of the bear candle prior to the bull move. The bearish order block would be the low of the bull candle prior to the move down. Here, we're looking at the order block on the 1 hour time frame. Generally speaking, the higher the time frame, the more solid, or perhaps the more consistent, the more reliable of that concept. Now, I should have maybe mentioned earlier, you'll probably also notice that the video is moving a little bit faster. So sometimes when I start the video, I don't know how long it's going to take to reach the desired, when I'm right, because sometimes I do call it wrong, but I don't know how long it's going to take to reach the desired target. So when I originally did this video, it was about 50 minutes approximately in time frame. So to save you time, because I'm making this about you, to save time, I've sped it up. All right, so please work with me as you're seeing time elapse a little bit more quickly, and then I go back and do the voiceover to try to make sure everything lines up and I'm succinct in my explanation so you are onboarding understanding as we go through this particular video. With that said, we use the order block as the highlighted blue area below here. Above, we are denoting a fair value gap. The fair value gap that we're denoting is also on the hour time frame in this particular scenario. So remember in video 1 where we kind of talk about the yo-yo, and that's, price is moving back and forth between key areas where I would anticipate there maybe would be a floor, a foundation, or support to an area where there would be a ceiling or resistance. And this is not something that happens all the time, every time. It's something that when you have been doing this for a decade, you begin to notice consistent happenings that you can find reliability. And this is the kind of the crystal ball here, if you would. This is to give you the cape for Superman so you can be empowered and find strength in this. As you're practicing and you're going into your charts and you're seeing this, I've had to learn to lean on the side of probability. And when you are a trader and you spend hour upon hour, my wife used to tease me, I would sleep, and it sounds crazy, and guess what? It is crazy. I would sleep in front of the computer. I would sometimes work through the New York session. So the New York session starts every day Eastern, 09:30. And then I would come back and wake myself in the middle of the night for the London session, oftentimes around 2 a.m. Eastern. And I would simply observe how the market would behave. I would take trades, I would practice. Sometimes I would make money, sometimes I would lose money. But what I always found were lessons. You cannot shortcut that kind of learning. When you're going to your doctor, when you go to your dentist, when you go to someone to work on your car, when you are asking someone to build your house, it's okay that the person may not have years and years of experience, but you would agree with me, there's a higher level of confidence, there's a higher level of appreciation of someone when he or she has crafted their art, when he or she has had numerous flight hours experience. You feel more comfortable sitting on that plane than someone who just started this and just got their license yesterday. The whole point here is this, is that when you've been doing this for a while, you've figured a few things out. So what I've found is that order blocks, fair value gaps, especially on the higher time frame, the likelihood of those holding are higher than on a lower time frame, or they are higher than maybe counting on other random drawings on a chart. Have I used trend lines? Absolutely. Can you make money with trend lines? Yes. Have I used indicators? Absolutely. Can you make money and be profitable indicators? Yes. Have I found that anything is more reliable than things like the Fibonacci, fair value gaps, order blocks? I've found these to be pillars that you can build a training psychology or philosophy around to consistently do base hits and pull money out of the market. Now, that's been my experience. Your experience may be a little bit different, and that's okay too. But here in this particular series, Fibonacci to Fund It, we're trying to show how to use the Fibonacci and some confluence with these principles to be able to get base hits, to do small wins. I think about a lot of people. I'm in the United States of America, and when I did my master's degree program, we studied the financials all throughout the globe. So I know the financial makeup in different countries differ. So I am not unaware, having been in the military and lived on different continents. Being that I live in the United States, sometimes we have a lens through our experience of living in the United States, but I've also lived in the Philippines. I've also lived in Korea. I've also lived in Germany. So there's other places where a dollar doesn't mean the same thing as here in the US. What is my point in sharing this? I'll speak to me, have often came to trading in the very beginning on this is how I'm going to get rich. I want to encourage you to get rid of that mindset. My conversations predominantly talking to the people who are simply just trying to supplement their income. I'm trying to talk to people who are not coming here and trying to treat this like it's a lottery, but they can get base hits. And if you've ever played baseball, if you can get a base hit, a base hit, a base hit, that's how you're going to achieve the home run and your team will win. But if you come out here just a swinging and swinging, because I've done it, and sometimes, truthfully, the truth be told, I still do it, because you resort to old habits and you get the licking the chops, and you see the money is in front of you, even as you're seeing on the screen right now, and you get a little aggressive and you get a little excited and you get ahead of yourself. And more times than not, you end up losing more than you're winning. So we're slowing that down, and we're using some basic principles in this Fibonacci to Fund It series to help you to get funded, because I've known a lot of people who put a lot of money in and never got any money out. Let's fix that. So what you're looking at right now, you'll see we're right at the 61.8 where we talked about throughout the series as one of the golden level areas. We've come back, we've gone in profit, we've kind of done this yo-yo between these areas. And you have to learn to be a little bit patient while you're doing this. But sometimes as you go in profit, you may find this is a good time to move your trade into a slight profit. And then if it comes back, I'm okay with getting right back in if I believe my premise is correct. If I believe the target is still has a high probability of reaching. And also considering the time of day I'm trading, if I believe that I'm at a time of day where I'm still allowing myself a window of opportunity to hit my target. With that said, when considering an order block or considering a fair value gap, these are areas where smart money or large institutions consistently most likely enter the market in a substantial way, which is why you see displacement oftentimes, not every time, but the time of day does matter. You continue to see displacement, a push away from these areas, so you can feel very comfortable. If you bounce the ball on a cement floor, it's gonna push back up. If you bounce the ball on let's say on grass, you're going to have a different response on grass or sand than on a cement floor. So I look at some of these, given areas. I'm just trying to think of different ways to explain and to give you a visualization of what I'm thinking of. But I think of a lot of these various areas of the fair value gap on the 1 hour time frame in this case, or on the order block, that this is an area where I can enter with a high level of confidence. There's other confluence to consider, but as you're seeing here, as the price is moving closer and closer to the desired target, I'm also denoting in confluence, as I talked about a little while ago. Hey, here's the midpoint. Based on the previous trading day's high and low, we are getting close to the midpoint, the equilibrium, where price has a tendency to have a magnet to be pulled. While it's not a traditional Fibonacci level, it is a consistent point that price passes through while it's on the way to other points on the Fibonacci. You got to go through the middle. So the midpoint is a masterpiece to remember. The midpoint is a gold mine. The midpoint, the equilibrium, is somewhere you want to write in your notes, and you want to underline it and circle it and highlight it and put it in big bold letters to allow this to help your funding process, your being profitable process, to be anchored to your understanding that I don't have to spend 10 years like this guy in trading to figure out. This is a great way to advance your profitability, to focus on where is the midpoint and let that sink in. Hope that'll help you. Now, we came down, as you saw, we were pretty close to our target and objective. And I shared in the previous video, and I'll continue to share in subsequent videos, that I'm okay with sometimes exiting position or making my stop loss tighter to capture the majority of the profit, because it just makes sense. I'm not here to impress you. You're not trying to impress someone. You're trying to be profitable. It's not to show someone how cool because you called it right. In fact, I'm going to go as far as to say as arrogance can keep you struggling because and I've battled with this because I have to be right, because I want it to do what I said it's going to do. So I can tell you that I had this one shot, one kill, that I was able to call it precisely. But we're moving towards our target now, but we could have already had 1,500 just by shaving some off as we were trading. So now here's one of the challenges, as I talked about at the end of the last video. We got some challenges with the challenge. Here I am. I hit the target. How exciting. We passed the challenge, and we are now a few dollars short of winning. Okay, this should be the moment of, all right, we're excited, we celebrate, we passed this top step challenge. We need to make 3,000 and not lose 2,000. And now we are just a few dollars short because I put my take profit, I didn't calculate it quite right. And now I have to enter another position and then suffer through some drawdown and it pulls back. But I'm still believing it's heading higher. But anytime you kind of get around that midpoint, just as a tip, hint, anytime you kind of get around that 50% of the previous day, price sometimes reverses. Sometimes now you're going to have to watch it pull back on the rubber band. Sometimes it continues to move forward. Sometimes it actually pulls back to where you got it in the first place. I've just seen time and again, I'm going to save you some frustration. I've observed that once you're at equilibrium, the midpoint, you may see continuation or reversal or some ranging and accumulation. So that is something else to put in your notes. But look, we are here, ladies and gentlemen, $1,509. We have breached the $3,000 mark that we needed for this challenge. We did it in 2 days. We weren't, in my assessment, super aggressive, but we were also not afraid to take the shot, afraid to take the trade. We were able to find some key areas using the Fibonacci and some confluence that we talked about. And I want to encourage you, ask questions in the comments. I'm going to do my best. I may not always get it right, but to help you, because I don't know if you've been doing this for 10 days or 10 years. I don't know if you have made, if you've spent hundreds of dollars or if you've made hundreds. I don't know any of these things, but I want to assist and serve as best as I can. So use the comments to ask questions, and I'll do my best to give you honest, true feedback. And if I don't know, I'm going to tell you, I don't know. But let's take a moment now and look at the stats. Let's look at the statistics. Let's look at the data of the performance history. And I want to say this to you in full transparency, honesty, but also with humility. What I just shared with you, I was able to record and share and show you because I felt confident that I can repeat this again and again and again. Like we were talking about probability, I knew using the framework that I pointed out, the Fibonacci, order block, fair value gap, that I can repeat this on Monday, Tuesday, Wednesday, Thursday, Friday. Not that you have to trade every day, but I can find these consistent setups and help showcase and show someone where more times than not you can win. So let's take a look. We're looking at the performance report. You see we made $3,008. The requirement is $3,000, 100% win rate in this case, which I believe you can do that too with some of the principles that I've shared. We see that the average trade duration is 11 minutes. The total number of trades. Some people, you take so many trades, but you saw we were also patient through some of these trades, and I really could have had more. So consider that. Sometimes that was on the low end for me to be profitable. The first day we did $14.99 because of the 50% consistency requirement. We couldn't go over $1,500. And the second day we made $1,500 plus a little extra to win. And I found with Top Step that they will calculate that and allow a win. I don't know what their exact percentage or margin is because they're looking for 50%, but they're not going to make you trade a third day to make $2, $3, $4, $5, $10. So all the areas on the Fibonacci are still highlighted. That's what I want us to continue to talk about. But before we get into the next video, we're going to show you how to activate your Top Step account in this case. And we may do the same thing with some other prop firms that I work with, show you how to activate your account, get funded, and then do what? Why are you here? It's Fibonacci to fund it, but the purpose of being funded is so you can get to a payout. Now that we passed, can we activate this account, be funded, find a setup using the Fibonacci, and have our first profitable day? Let's find out in the next video. Join day 3 if you want to be free. God bless.